Hey, good morning and welcome back, everyone, to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at Options Play. And as of earlier this week, we have made effectively a new all-time high on the S&P 500, as we indicate here on this particular chart, basically breaking out to new all-time highs recently. We see that for both the Nasdaq 100 as well as the S&P 500. The Nasdaq 100 yesterday during the day, intraday, at least printing a new all-time high, retesting that 515 level from a couple of weeks ago. You see it on IWM here as well. It hasn't closed at all-time highs, but certainly pushed to new all-time highs in the last couple of days, and even equal weight S&P 500 index pushing to new all-time highs recently. So overall, when we look at the major indices, you have a market that continues to confirm new all-time highs. The participation on this particular rally has been particularly broad, which is generally speaking a good sign for equity markets to push the new all-time highs under those conditions. So as we take a look at the other markets, we continue to see what looks like a picture that is fairly supportive of equities continuing to move higher going into the end of this year, which very much aligns with the playbook that we saw back in 2016 after Trump won his first election victory. You have growth outperforming value by a fairly small margin, but in margin that's starting to increase a little bit here to the upside, while commodities continue to moderate and trade to the side, while gold and silver kind of move to the side. We have seen high yield bonds continue to also print new relative highs, providing a bit of a risk on signal here from the bond markets. And we'll take a look at kind of where the treasury yields sit and how that, generally speaking, is also supportive here of equities. But as you can see, the VIX pulling back below 14% here. We basically printed a new 6-month low here. If we go back for the VIX, which presents, for options traders, a newer low implied volatility regime that does provide some opportunities to get long volatility. Both where expectations are for volatility to pick up from either stocks that beat on earnings or potentially miss on earnings, as we soon enough are headed back to another earnings season here in about a month or so. So VIX back to 6-month lows presents opportunities for options traders. You have the 10-year yield kind of moderating back around 4.2%, which happens to be the 50-day moving average. We'll see kind of how yields respond to that particular level. We continue to see expectations for rate cuts here in December. The probability of another 25 basis point rate cut continues to grow. The big event this particular week is going to be the non-farm payroll here on Friday. We obviously saw a pretty soft number here in October due to the hurricane and with Boeing on strike at the time. So expectations are for November job numbers to come back fairly strong here. Consensus right now is around 200,000 jobs added in November. We'll see how we actually stack up relative to that number, because that's going to be a primary driver of sentiment going forward, and also expectation of what rate cut probabilities of rate cuts in December and going into next year will look like. You have the bonds effectively catching a bit of a bid here after reaching that $90 support level here to the upside, which corresponds with the decline in yields that is generally supportive here for equities. You have the dollar index that moderate between 106 and 107 here right now, and that's going to be the short-term trading range that I sort of expect the dollar to trade in and then potentially break lower here. Especially now that yields are starting to decline a little bit here. We expect the US dollar to also further weaken a little bit. You have Bitcoin, after reaching that 100K mark, kind of moderating a little bit and sort of at risk of potentially a little bit of a pullback here into that $80,000 level, which comes in around the 50-day moving average. So Bitcoin losing a little bit of that momentum, losing that relative strength here at risk of a bit of a consolidation and pullback. And gold, as you can see, continues to consolidate around that 50-day moving average, coming in around 2650, and oil back to effectively what are 1 year lows. This is going to continue to weigh on energy stocks at the moment, especially as the OPEC nations kind of start to negotiate as to whether or not we start to see some rate cuts at the moment, or production cuts rather. What we continue to see is demand on the lighter side here for oil, and that's continuing to push oil prices back to those 52-week lows and potentially even lower if we don't see a supply cut here in the near future for oil. That's going to be a bit of a drag here on commodities. And then when we look at the sectors, we see a fair amount of sector rotation, but as you can see, technology largely has actually fallen behind, basically failing to kind of break out from the highs that we reached back here in early summer in July. We still haven't failed to break out from those levels yet. We're close, but as you can see, the relative performance of technology is actually pretty far behind here at the moment relative to the S&P 500. On the flip side, what you do have is consumer discretionary reaching new all-time highs and outperforming the S&P 500 by a pretty significant margin here in just the last few weeks. Same thing here for communications, breaking out to new all-time highs while outperforming the S&P 500, and financials as well. Same thing, breaking out to new all-time highs, outperforming the S&P 500 by a pretty significant margin. On the flip side, you have materials that continues to underperform here. You have materials, as you can see, over the past couple of weeks have really started to fall apart here relative to the S&P 500, which is a pretty significant difference between that and industrials, which actually has continued to outperform the S&P 500 over the past few weeks and the past few months. So that's really interesting to see kind of that bifurcation right now between materials and industrials. And you also see energy shares, as I was telling you before, as we kind of get back to recent highs here around that $97 level, with oil prices at 52-week lows, that's going to provide a bit of a drag here on energy. And that's exactly what we're starting to see here as energy stocks starting to underperform after what has been a pretty significant rally off of the back of the Trump victory. But with oil prices at 52-week lows, that's always going to continue to be a bit of a drag here on the market. Same thing for utilities. As you can see, utilities recently pushing out to new all-time highs. But as you can see, those all-time highs are actually continuing to underperform the S&P 500, and that gave us a more of a check back here into the trading range, much more of a range-bound market rather than the breakout here from utilities when we take a look at the relative performance. And then home builders also struggling a little bit here at those kind of previous highs. You've got a bit of a double top or triple top, however you want to call it there. But if you look at the relative performance here, starting to fall behind here from the rest of the market, and at risk of turning to more of a range bound markets here rather than continuing to break out to new all-time highs. But semiconductors, as you can see, over the past 6 months or so, continues to underperform the S&P 500 by a pretty significant margin. And this is really a concern here that we continue to see further weakness here from the semiconductor market, even though, you have a couple of names that are sort of outperforming here by a pretty significant margin. So looking at the ideas here for this week, as we see an equity market that looks fairly supportive of uh, of stocks going into the end of the year, taking a look at some of the stocks that we want to take a look at here. First one I want to point out here is Dexcom. This is a stock that we recently just added to our buy list here this week. Dexcom, as you can see, similar to some of the charts that I'll be showing you here today, after gapping lower here from that 110 level all the way down to 65, so nearly having the stock price on earnings. What you have here is what looks like the completion of a bit of a bottoming formation here. Um, and we recently just broke out here above that $75 uh, resistance level here on this bottoming formation and starting to look a little bit of constructive here. I'd like to see that breakout here above 80, but the upside potential here is pretty strong here into the low 100s here to the upside for Dexcom. They do continuous glucose monitoring devices. They are fairly um, they're significant leaders in this particular space of glucose monitoring devices. They recently have made partnerships with Apple and Aura and wearables devices, and pose some upside potential here, especially as the stock has really gotten hit here so hard over the last 6 months or so. As it starts to recover a little bit from those declines, the upside potential remains fairly attractive here for Dexcom. Another one I want to take a look at here is CoStar Group, which is a provider of commercial real estate services. As you can see, kind of similar to some of the other charts that I'll be showing you here today, completing a bit of a bottoming formation below $80, but recently broke out above that level, came back to retest this level as support, and the risk to reward just looks fairly attractive here for some further upside here for CoStar Group. Probably not in a lot of people's radars in terms of a stock. Doesn't obviously trade as many contracts as most of the other big names that we typically take a look at, but I think worth paying attention to here in this particular market. The next one I want to take a look at here is NVIDIA. We continue to like NVIDIA here, especially on the recent pullback here into that 130 level. This is really where I think both the technicals and fundamentals align up fairly well here. You have that pullback here to a major support level, which means that the risk to reward level for an upside exposure is fairly attractive. But more importantly, NVIDIA trades at about 30 times forward earnings. And then when you look at the fact that the rest of its industry peers, it looks like it's trading at a premium. But if you consider the fact that they're expected to grow revenues by about 8 times faster than the industry, expecting to grow earnings by about 5 times faster than the industry. And in terms of net margins, we have about 55% net margins versus the industry average that's under 10%. I think the fact that it trades at about a 50% premium relative to the industry is actually still on the lighter end. And given just how insatiable tech companies will require growth in terms of their computing power to power, both the AI models of today and the future. I think NVIDIA is very much at the forefront of that, of this AI revolution, and the demand for their chips are just starting to actually ramp up here, especially if you look at their latest generation Blackwell chips, and they started to ship those here last quarter. That presents, in my opinion, the big upside opportunity still in NVIDIA, even though I think we could argue that NVIDIA is, one of the best performing stocks. The outlook here for NVIDIA remains incredibly strong, and the valuation, I think, is still supportive of further upside here for NVIDIA. The next one I want to take a look at here is AstraZeneca. This is one that we brought up here in last couple of weeks here. After what has been a bit of a fall from grace here, you have this kind of topping formation, a bit of a head and shoulders that broke down here. Things really got oversold down here in the low 60s, and this is kind of when we brought this up, when it was in this trading range where it looked fairly oversold on both daily and weekly timeframes, and it looked like it was due for a bounce. And that's so far what we're starting to see is a slow bounce here for AstraZeneca. It trades at a pretty discount valuation relative to its peers, even though it's expected to grow faster and is more profitable than its peers at the moment. So this really presents in my opinion, some further upside here. You have a gap fill around the low 70s. That would be your first target, and a gap fill around 75. Those would be your two immediate upside targets here for AstraZeneca. Another one I want to take a look at here is Intel. We recently just saw the departure of its recent CEO, which added a little bit of volatility here to the stock yesterday. But basically, what we saw is a constructive outlook here for of Intel, broke out above 22, traded in a bit of a range, broke out the 24, traded in a bit of a range, and we're looking for that continuation higher here into the low 30s. That would be our initial upside target here to the upside. Intel trades at the moment in line with the rest of the industry. However, it is expected to grow both EPS and revenue faster than the industry. The biggest, I would say, concern with Intel is the fact that it recently went through some restructuring and impairment costs that turned their margins negative. But expectations for their margins to return back to normal this quarter is what I believe is going to be driving some value for Intel as it kind of returns back to profitability and is expected to grow faster than the industry. That's really what presents, I think, some upside opportunity here for Intel that aligns the technicals with the fundamentals. I will continue to bring up the story here between Apple versus Meta. Even though Apple has reached a new all-time high, note that these new all-time highs, as you can see, is continue to underperform the S&P 500. That leads me to believe that this is more likely to check back into the trading range rather than just continue to break out higher here. Not to mention, Apple trades at about 31, 32 times forward earnings. Which, if you given which when you expect that both top and bottom line is growing at single digit numbers, and makes that valuation a little bit difficult to justify when growth expectations are, basically in line with the average S&P 500 stock. The only thing that provides a premium valuation for Apple is the fact that it's fairly profitable. It's, net margin of 26% is significantly higher than the industry and the average S&P 500 stock. But when you consider the fact that the outlook for Apple continues to deteriorate, you have iPhone 16 sales that continue to kind of struggle a little bit here, especially in China. You have Apple Intelligence that was meant to be driving the next upgrade cycle, continue to be incredibly underwhelming. And what they're expecting to release into next year is actually incredibly far behind the overall industry in terms of AI tools for their Apple's products. And and then you then look at kind of the Vision Pro, which is meant to be their big next reveal of what's going to be driving revenue for the future for Apple. And you really see sales numbers that continue to fall further and further behind. You have developers that have failed to, gain any traction with developers and building apps, which effectively makes the product dead in the water. And at the same time, you have stocks like Meta that have recently presented products that are directly competing with Vision Pro that arguably, even though they're not commercially viable yet, uh, seem to be leaps and bounds ahead where Apple is in terms of the technology from a commercial viability perspective. And that's really where I think Meta presents a much better opportunity here for uh, versus Apple. Apple Meta trades at a discount relative to the industry, even though it's expected to grow faster and is far more profitable than its peers. So this is really where I think if you look at the long-term potential here of what's meant to be driving the next technology cycle past, kind of the initial iPhone innovation, and you think about augmented reality, Meta and Snapchat actually look like they are better plays in that particular space than Apple look at the moment. So I think that given the valuation difference between Meta and Apple, I actually think Apple looks quite expensive and Meta actually looks fairly cheap here at the moment. And technically speaking, both of those charts align fairly well here for a more neutral to bearish outlook here for Apple and a more neutral to bullish outlook here for Meta. And then looking through the list of stocks that we recently brought up here, Adobe is still one that we also like here within the AI space. It's continuing to kind of trade somewhat range bound here, but we added the stock here around this 490 level here to the upside, and we're really looking for a continuation higher into the high 560s, 570 level here to the upside, and refilling that gap here. Adobe is one of the few stocks that actually has an AI product that they're selling today and monetizing. And for those reasons, I think Adobe trades at a valuation that's at a slight discount relative to the industry and actually should be trading at a slight premium given the fact that it's more profitable and grows faster than its peers. Another one I want to take a look at here is Block or Square. As you can see, Block recently broke out to new recent highs. We've been long Block ever since, in this low $70 range when I started to break out here above on earnings. And we're looking for that continuation higher here. And exactly what we got above 87.5. We're looking for that to continue moving higher. Another stock on our buy list here is Lululemon. Lululemon, as you can see, continues to grind higher here from where we trade, and we're looking for that continuation higher here as consumer discretionary names continue to perform fairly well. Lululemon is at the forefront of that particular industry. You also have Disney that continues to perform quite well, and we're looking for that continuation up to those 52-week highs around that 123, 124 level here. We added Disney here when it was trading around this $96 level here. Basically similar chart setup to what we've been showing you here on a lot of different stocks where we've kind of bottomed out, broke out here above that resistance level, and have just continued on. And our immediate upside target is we're very close to reaching those specific levels. Bristol Myers is another stock that's been in our list here that continues to perform well. We saw the breakout here above 54 as that potential opportunity, came back to retest this level of support, and is now continuing to push higher here. Our initial upside target here is around $60, which we just about hit. On Bristol Myers, we do have extended upside targets here that reach into the low 80s. And Bristol Myers trades at a very significant discount relative to its peers because at the moment, over the past couple of years, it's struggled with profitability here, but we do expect Bristol Myers to return to profitability in 2025. And then when you expect that growth expectations for the stock are higher than its industry, once we return to profitability, the valuation starts to, in my opinion, should be trading back towards the industry median or average, which presents again a pretty significant upside potential here for Bristol Myers. And then lastly, the last stock on our buy list here is Shopify. Shopify continues to outperform kind of if you think about Amazon and their e-commerce opportunities here. We liked Shopify, all the way back here around this $70 level here to when it broke out and came back to retest this level of support. We're looking for that continuation. Now that we've reached kind of our initial upside target of 115, our further upside target here for Shopify is in the low 140s here to the upside. So we've kind of reached our initial upside target here for Shopify, and now we're reaching for those extended targets, which is in that 140 range here to the upside, which would put Shopify at nearly a 100% gain from the time we entered this trade back here in September. So to get a continued update on kind of the stocks in our buy list, please join us on these Tuesday morning sessions where we give you a brief overview of kind of our views here from a macro perspective, but more importantly, also present to you our top trade ideas for the week. And like I said, this week, we just recently added Dexcom and CoStar Group as two new stocks into our buy list. So looking forward to that and keeping you guys updated on where we currently stand on the markets and our opportunities that we see here in the markets. We hope that this is helpful in giving you a better start to your week with regards to setting up the bigger picture and some of the ideas for the week. So with that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next week.